Hi, it's Brian McArthur of Design My Medicare. I want to spend just a couple of minutes to do a little bit of a deeper dive on a short-term home health care insurance policy that we've been making available, or at least bringing to the attention of our clients who live in the appropriate states. And candidly, even the people who live in states like California, where this is not available, I still encourage you to listen because you might have family members, probably parents, who live in states like Nevada and Arizona. And if you and your siblings are going to be the people responsible for providing them care during an extended care event and or at least overseeing or managing it, I would still tune in. So I'm going to go pretty quickly here to give you the bullet points, and then you will have an idea whether this is something that we should speak about. So, a couple things I would bring to your attention. These are the states that this solution is available in. So, no California, no Florida. If your state or your loved one's state touches Canada, not available. No tri-state area, no New England, and then there's a couple of other states like no Kentucky, Kansas, New Mexico, Colorado, or Utah. But a lot of us, have family members in Texas, Arizona, Nevada, Oregon, in the Southeast. You get the idea. Okay, so a couple things I want to point out before I go into this. Um, Everybody becomes concerned about long-term care or an extended care event usually around 55. Your parents are age 80. You just need one parent of yours or one parent of your spouses to have gotten sick, gotten better, gotten sick, didn't get better, or they need care now and you get it. Long-term care or extended care is not for sissies, definitely worth planning for. So 55 is when it usually gets onto your radar. Some of you bought long-term care insurance at 55, and a lot of you didn't because you're kind of putting kids through college and that sort of thing. In the 10 short years between 55 and when you meet us at Design My Medicare, the menu of long-term care insurance options has shrunk, not eliminated. So I don't want to overstate it, but there's fewer options, and you may find that the options that are available at 65 are way more expensive. That will certainly be the case with traditional long-term care insurance. Um, and or so it's more expensive if you're going to pay monthly premiums. And if you're looking at an insurance policy where you allocate 50 or $100,000 into an asset-based long-term care product, you'll find that the leverage you get is way less. I don't want to dissuade you from having that conversation with your financial advisor, but it's not uncommon that the conclusion you come to at or after age 65 is that it's too expensive to buy now, or I'm not getting as much leverage by parking an asset into an asset-based long-term care policy. Finally, you may have had a conversation with your full-service financial advisor and who let you know that the health underwriting that you have to go through for long-term care is pretty thorough. And maybe he or she said, hey, based on your health history, you shouldn't even bother to apply. So if you were worried you could not get through underwriting, or you cannot afford, or you just didn't find enough value in long-term care insurance at or after 65 or around 65, this is for you. So look, it's not a long-term care policy. It's literally called a short-term care policy. Okay. So it covers you for less time, but it also costs less money. And it's the only thing in between you reluctantly trying to self-insure this risk and having had long-term care insurance. There's like nothing in between besides this. So if you're in the states where it's appropriate, we are encouraging everybody to give it a look. Skip this part because I'm not smart enough to know, even though this policy will pay you $300 a day for every day that you receive skilled nursing at home, I'm not smart enough to know whether your skilled nursing is going to be able to be delivered at home. So I want you to skip over that for now and focus on the core benefit that I think is most valuable to our clients. It's this home health aid benefit. Okay. Skip the basics, skip the standard. None of those are enough to be meaningful. The complete package is $150 a day reimbursed to you for every day you receive care in your home. It says 120 days. I'll show you in a moment. It costs almost nothing to move this to 180 days. So the reason I'm bringing this to your attention is it's 150 bucks a day that you get reimbursed for every day you receive care in your home. It might be medical. And if it is medical, maybe you get the 300 bucks a day. I don't even want you to focus on that. I want you to focus on even non-medical, just somebody, a licensed caregiver in your home, helping you with your activities of daily living. 150 bucks a day for 180 days. So that'd be 6 months if you used it consecutively. 150 bucks a day is $4,500 a month. That's a pretty meaningful monthly benefit for you to receive home care. Now, do I know that if you have a long-term care event that you're going to receive it at home? No, but 80% of long-term care claims that are paid by insurance companies tend to start off at home. So I don't want to deal in the shoulds and maybes. If you have a long-term care event, 80% chance it's going to start off at home. It doesn't matter how nice the facility is in your neighborhood. You don't want to go there until you have no choice but to go there. Okay. So this is a little bit more of a target rich environment. Home care, 150 bucks, 180 days. What does it take to get into the insurance company's pockets? It's identical qualification to go on to claim, is what they call it, um, as a long-term care policy. Your doctor needs to sign off that you cannot perform 2 out of 6 activities of daily living. That's exactly the way the long-term care policy that you wish you bought and didn't triggers claims. 2 out of 6 activities of daily living, or your doctor signing off that you have a severe cognitive impairment. What are the activities of daily living? And again, that's with this short-term care policy and long-term care policy. The doc wants to know, can you feed yourself? Can you bathe yourself? Can you dress yourself? Can you transfer yourself? Can you get out of a bed and into a chair, out of a chair into a bed? That's transferring. Do you have continence or bowel retention or continence issues? That's number 5. Number 6, can you make an unassisted trip to the little boys or little girls' room? As long as your doctor signs off that you cannot perform any 2 out of those 6 activities of daily living, you're going to go on to claim. Now, it's very possible that you cannot do those things because of a medical event, but it's also possible that you just deteriorate a bit in your ability to perform your activities of daily living. And that does not mean that suddenly you want to leave your home. Okay. So it's really important. Yes, medical care at home, this pays. It'll actually probably pay you more. I don't even want you to worry about that. I want you to worry about 150 bucks a day for 180 days. I wish it was more. I wish it was longer. If it was, it would cost more. So this is really the next best thing to not having any insurance. Okay. So let's talk really quickly. Prices. Um, you could dress this up to do a whole bunch of different things. That's not my goal. If you're age 65, as an example, the base policy is $47.57 a month. Skip all these wacky riders that you don't need. And then this one you do need for $1.82. You're bringing that $150 a day. The standard benefit is 120 days up to 180 days. It costs you almost nothing. So at age 65, for 50 bucks a month, you just got 180 days of home care reimbursed to you at $150 a day. If your loved one's taking care of you 5 days a week, I'm sorry, if you're getting cared for 5 days a week and your loved ones are caring for you on weekends, well, then you're just going to stretch that 180 days. Okay. 50 bucks. A matter of fact, it probably won't even cost you that, because if you take any medications, this reimburses you for all of your medication refills. I'm just going to keep this simple. Let's say you're on 4 generics. For every generic you fill every month, even if you don't pay a copay at Walgreens, you get a $15 reimbursement. So 4 generics at 15 bucks is $60 a month. At age 65, you're paying $50 a month, 50 a month, and you're getting reimbursed $60 a month. This thing doesn't cost you anything. At age 65, pretty much through age 70, eventually the rates will go up, and that $60 a month reimbursement will not cover all of your premiums. But this is kind of a no-brainer for people who don't have long-term care insurance. can't afford it, worried they can't qualify, or you have loved ones in states like Arizona, Nevada, and all the responsibility of arranging the care falls upon your shoulders or will. Um, what does it take to qualify? Long-term care insurance. And by the way, of course, like if you apply for this at 75, it's more expensive, right? $66 a month plus three, so it's $70 a month, right? And then you're probably getting 60 reimbursed. It's almost free extended care insurance for 180 days. What does it take to qualify? Well, if you have ever looked at long-term care insurance, it's very thorough underwriting. With this, say no to these four questions. You say no, you're in. That's the way it works. Okay. So this is the lowest friction way to correct for the sins of not buying long-term care insurance earlier, which now would be unaffordable. Okay. So it's these four questions. The only caveat is that if you have a goodness, did I share the screen? I don't. Oh, I did. Um, if you have a pre-existing condition that triggers the 2 out of 6 activities of daily living or the severe cognitive impairment, if it's a pre-existing condition that made you go on claim in the first 6 months, they won't cover it until you get to the 6 month part. That is it. This company's around. They're paying claims. This is something that everybody should consider. If you don't have long-term care insurance or your loved one doesn't, you previously could not afford a long-term care policy that pays 4 or 5 years, at least this pays 6 months, or you were concerned about being able to qualify for the thorough underwriting. If you have any questions, Brian at designmymedicare.com, and we can go deeper into it. All right, take care.